Hey there, good morning. Happy New Year and welcome back to the channel, guys. Good morning, Mohammed. How you doing, mate? It might just be you and me. But it is early on New Year's Day, so I'm not surprised if we get a small turnout today. How's the music? It's not too loud, Mohammed. If you could give us a thumbs up, that'd be amazing. Let me know that you can hear me okay. So obviously the market is closed today. So I just thought we might take the opportunity to have a quick look at what price has been doing, what we might be able to expect for the rest of the week. Just let me know in the chat if there's anything you wanted to discuss or we'll go over. We'll jump over to the calendar. We can see on the calendar bank holiday today, so that's all day. The market will open again at 6 p.m. and then we'll roll into Thursday with unemployment claims at 8:30. That's the next high impact excuse me, the next high impact news event, followed by Friday at 10 a.m. with ISM manufacturing. I do like 8:30 news. Jerome, hey, how you doing, buddy? Happy New Year to you as well. I got a sample pack of Creed as a Christmas present, Jerome, so I'm working my way through the flavors at the moment. All right, let's have a look at the charts, eh? Yeah, I was pretty happy. I was very happy actually, because it's a perfect size, that sample pack. You know, you get a taste of, I think there's 6 fragrances in there, and it's quite interesting how they're all so different on your person, if you know what I mean. I mean, you would definitely know what I mean, but the one that I was really looking forward to, what was it? The Irish, help me out here. Yeah, the Irish tweed. So it's interesting because I really like the smell of that, but when it was on me, it didn't sit as well, and I felt like I could smell it all the time. So that was quite interesting. Okay, let's have a look at the daily for NQ. Obviously there's no market movement today as the market is closed, but we can see where price might be heading to. Now, a few things I like to look for when we're looking for bias on the daily. The main thing for me is just to try and keep it simple. Skin chemistry, yeah, there you go, skin chemistry. I knew there'd be a technical name for it. But yeah, I was very interested by just how the fragrances smelt different on me, and I've always found that the best suited fragrances for me are the ones I can't smell, but other people can. And I could smell the Irish tweed all day, and it was just, I don't know, it just played on me a little bit. So we want to keep it simple. When we're looking for our daily bias. And the best way to do that is just looking for internal to external or external to internal. You can see NQ on the daily here, we're pushing up into this internal, and it did look like we might potentially be disrespecting that, especially this candle here last Tuesday was quite a strong candle closure. But then Thursday printed this candle right here, and that candle for me is definitely insight to order flow. This starts to paint a picture. So we've got price moving up into an important level, into a point of interest, being the bearish FEG. And then we get a daily closure back inside the range. We sweep the high into this point of interest, and then we get a closure back inside the range of the previous day's candle. So that for me is insight to order flow, and I would immediately start looking for price to move lower. Obviously the reverse can happen, and we might look for price to move higher. So this, something happened similar here. We had like a sweep of the lows here. We swept obviously a number of daily lows plus this bullish FEG and closed back inside the range of the previous candle. The only thing that I didn't really like about this was it was a double sweep, so the candle swept both sides of the range, but it did give us insight to order flow. And what happened the following days, price ran higher. So moving from this level here, price ran lower. We don't have another POI until this level here. So this being our ERL, so internal range liquidity to external range liquidity. And the reason I've marked this level here, excuse my voice, sorry guys. I'm actually a little bit tired, to be fair. It was a pretty late night, seen in the new year. So the reason I've marked this level here is this is our range of opposing candles. And what I wanted to look for here is once we got a close through, if we did get a close through, is will price respect that level? And what did price do? Ran up, respecting this level, and continued to move lower. So we've now had 4 consecutive days of price expanding lower, but I'm still interested in price to reach this level. So as we move into Thursday, when the market fires up again, are we going to potentially see price expand lower? And then maybe Friday, we see a potential reversal. So I'm still bearish on NQ moving into Thursday. Jerome, up close candles should act as resistance in a bearish environment. Yeah, exactly. So that's these opposing candles, these up close candles. We can see that price used them as resistance and pushed up into that level and then move lower. Now, if price did manage to close above, well, there's your insight to order flow, where we might look for price to continue to move higher. So at the moment, price, oops, let's clear that up. Quite a large buyer's wick. So this will be a point of interest that I will be watching for price to react to. And you can see that we did in fact react to this level. Price moved to the 50% level of this buyer's wick and wasn't able to close through that level. So we reacted off that, closed above. So moving into Thursday, that's where I'll be interested in watching. Will price be able to expand lower through this level? Hey, good morning, Nico. Should we ignore wicks and only look at the bodies when it comes to the daily bias? That's pretty much a no, is the way I look at that. The wicks, so the bodies obviously tell the story. The wicks are manipulation, but what you might have thought here, for example, is if we take the midpoint of this FVG, so price closed above that midpoint, and we can see that price still held up on this midpoint, and you could have pictured this as price continuing to move higher. And again, if you look at the wicks, if price pushed through this FVG but closed back inside, then for me it's still respecting the FVG, even though the wick has pushed through. So I don't ignore the wicks, but I do use them for insight. So how, you know, if we've only wicked through this FVG, then, you know, for me it's still a valid FVG or a valid point of interest. Cool, awesome, man. Just duck down to the hourly and see how the market structure looks. You can see definitely looks like we're in a sell model. We had our change in the state of delivery. So the up close candles here, we closed through with displacement. So that's how I use change in the state of delivery. We want to see displacement. We had a nice displacement through this level here, and then price came back up and tested that level. So price continued to respect the change in the state of delivery before pushing lower. And again, each time prices tried to move higher here into a bearish point of interest, we've reversed. Again, you can see we have a sweep with a closure back inside the previous candle's range. Again, looking at this as a sign of insight to order flow, giving us a signal that price might continue to move lower. Again here, you can see quite bullish through these 3 hourly candles here. And we reached up into this bearish FEG, We get a swing point candle closure back inside the range. We sell off, consolidate, push up again. We close back inside the range and move lower. What I do like to see though is a point of interest. So obviously this candle here swept a bearish point PD array, so a bearish FEG, and same again here. This one did not. So Jerome says, I consider abnormally big wicks as inefficiencies on the lower time frame. If it usually looks like an aggressive V shape, leaving liquidity. LRLR 0.5 level of those wicks are really important to note. Yes, I also use the 0.5 of the wicks quite a lot. Sometimes I will ignore the wicks if, see if I can find an example. You might get like a manipulation right at a news event or something, you know. I might not be able to find something here, but say you had a breaker and you know through that breaker there might be a huge, like a large wick because of news or something like that, and I will actually ignore that wick even if price, you know, we do have our formation, for example, it might be on that wick. I'll just ignore that wick because it's just manipulation, and I'll still use the breaker. And it doesn't happen all the time, but I have seen that play out a number of times, but you know, that's not something that always happens, but that's like the only time I'll ignore the wicks. The other time might be if I'm drawing out my standard deviations. I'll just use this manipulation here as a example, but we've got quite large wicks here, both to the low and the high side, so I might even just use the bodies of the candles rather than the wicks to grab my standard deviation. This is just an example. This isn't where I would put my standard deviation, but just another example of when I would ignore the wicks, because if you start using the wicks, you know, you can see how much further the deviations move out. Let's have a look at ES on the daily. There's a similar story here. On the daily, price did continue to respect this bearish PD array. Bearish FEG. Again, we get the swing point candle closure. Candle closes back inside the range. And you'd be forgiven for thinking price might continue to move higher here. We've got a close above the midpoint of the consequent encroachment of the FEG, and it's quite a bullish close. You know, there's no wick or very, very tiny wick to the high side, but then this candle, this daily candle, then gives us insight to order flow. So then we're moving from internal to external, this being the target. We do have a close below the opposing candles here. So I'll be looking for, when we open, you know, does price respect this level and continue to move lower? Yeah, that's for the sort of ignoring the wicks at times, Jerome, is that what you mean? You know, these are things you need to test for yourself, obviously, guys. When you spend enough time on the charts, you start playing around a little bit, testing your own theories. And that's how you become an independent thinker as well. The other interesting thing here is that, you know, with this candle closure, and why I do try and just keep it simple with bias, but looking at internal to external or vice versa, is, you know, price closes above the 50% level of this FEG, and you've got, you know, essentially very clean, you know, smooth edges at the highs here. Yeah, cool, Jerome. So you could have been fooled into thinking that price would run higher here. And obviously, you know, when you come into, you know, what day was that? That was Thursday. You're coming into the day, you're only using the information that's previous. You know, we're inside a bearish FEG, we're closed above the consequent encroachment, very bullish close. You know, you may have actually had a bullish bias coming into that day. But at the end of the day, whatever bias you do determine, you're only using that to get in or out of a position. So it doesn't actually matter what the daily candle close is. If you were able to form an idea and get into a position that's profitable, it doesn't matter if you were bullish on the day and price closed lower. It's irrelevant. What's the deal with smooth edges, Nico? So essentially you're looking at, you know, equal highs or relative equal highs. These are an area of interest where there'll be lots of liquidity resting. Okay, so there would have been a lot of sellers here pushing price lower. You know, every time price continued to try and push higher here, it was met with resistance and move lower. So there'll be lots of liquidity resting here. And when you look at your draw on liquidity, this, generally speaking, would be a very nice draw on liquidity with the smooth edges, particularly when you start looking at your hourly charts. You know, if we have a look here, we've got equal lows virtually, and I know this did tick through, but I would still consider that smooth edges, equal lows. Okay, so there would be the draw on liquidity for me. And then once, if price does manage to push lower, I would be watching to see how price reacts here. Does it put in a reversal? Or do we continue on our way lower? I wouldn't necessarily say a volatile movement, Nico. I just look at it as this is where I'm looking for price to draw to. So, for example, let's say we've got smooth edges. Okay, that's our smooth edges. And through Asia and London, we've sort of been consolidating. And then when you come into the New York session, you'd want to essentially look for a manipulation lower. And again, if you've got a bullish bias on the day, when New York Open comes or news, you see manipulation lower, then you look for your unicorn, your entry function, and you want to see price seeking out those smooth edges. So this on the hourly structure, just looking at the structure for ES, this being the manipulation leg here that swept the high. Therefore, I would look at this level as the change in state of delivery, and we do get displacement through there. And then you could run your standard deviations. And then you use these levels as potential target areas. And what I like to see is that the -2 to 2.5 aligns with a draw. So, you know, this low here, this Monday, that was a daily low, that stands out for me. And I always target the -2 to 2.5. That's the area that I'm always looking for price to try and reach to. And if we get a close through that level, which we have done here, we can anticipate price reaching the -4. And, you know, price, you could, some might say this is bias complete. You know, I'd still like to see that level taken, and I think it will get taken down to this low here. Let's jump over to CL. On ES, Nico, do you ignore the FEG of the 21st? On the daily mode. Ah, 17th. Okay, cool. So on ES, we're on ES, yep. Are you talking about this FEG here? That's the 18th, buddy? Oh, 27. Okay, cool. Cool. All right, sweet. I got you. So this FEG here. Oh, you're saying 20. Okay, hang on, let me get this clear. 27th of December or October? Sorry, pal. Just want to make sure we're on the same page here. More left, okay. 27th. So 27th of October. Let's have a look. Where are we? 27th. Oh, you can't see the date on my screen. So is it this one here? Okay, cool. Well, I don't ignore this, no. This is still a point of interest. Obviously, price came down into this level and moved higher. So what I'd be looking for now is this being the draw, price to come down and see if price reacts to this level, or does price actually come through this level, invalidate this FEG, because we still have this portion of that FEG unmitigated. Yep, and same deal here. We haven't actually seen price close through this level yet. So we haven't completely invalidated this. We have mitigated majority of this FEG, but we haven't had a close through that just yet either. Cool. So until we get a close through, but once we get a close through, I should say, then that FEG is completely invalidated for me. Well, you also want to look at the most recent information. So, you know, at the moment, I would be looking for, I wouldn't necessarily be looking at this FEG, okay, because I really want to concentrate on the most recent information. This one is more interesting because obviously there's a portion of it that's still open. Okay, price hasn't wicked through yet. But using the most recent information, this swing low here is what is more interesting to me than a close through this bullish FEG. And then because we are in strong bearish order flow here, then we drop to the hourly, and you'd want to see or look for a change in the state of delivery to start leaning bullish. So this being our area of interest, that's the remaining portion of that FEG, which is at that swing low. You'd be looking for our reversal pattern, which is also a change in the state of delivery. Then you can start hunting for bullish entries. Let's jump over to oil, have a look at oil on the daily. I feel like oil's finally doing something. Look how it's just been ranging. It's been calling up. Hey, no worries, Nico. Thanks for asking questions, buddy. I appreciate it. You know, if anyone uses triangle patterns, or I mean, a lot of traders, you know, started with using patterns. Oops. But you know, looks like we've been calling up here. Finally, looking to break out. The weekly actually looks just about the same. You can see huge triangle pattern. So if we do get a breakout here, then I'd actually be anticipating price to move higher. So let's jump back to the daily, because again, with the daily, it's been a little bit difficult to determine bias because it's been choppy. What I've been working from is this breaker here, where price has managed to find support here. There's a tiny little bullish FEG that price did manage to move out of as well, and we're finally starting to see this move higher. I'd been targeting this high, stood out to me for a number of days. Even when price was moving away here, I was looking for price to reach back up to this level. It tried, it definitely tried a couple of times, but it didn't manage to do it until Monday. The reason this stood out to me so much is because there is zero wick to the high side. So this is a strong draw on liquidity paired with smooth edges or relative equal highs, whatever you'd like to call them. So price broke through, we closed above, and then my eye ran to this level. And again, this level for me is interesting because we have this bearish FEG, or this portion of that FEG still mitigated as well. So I'm currently still bullish on oil, looking for this level to be taken. You can see how we get that insight to order flow. Here we have a swing point candle closure out of a point of interest, closes back inside the range of the previous candle, and then price moves higher. This down close candle supports price. I mean, I wouldn't say to the tick, but you can see how we came down, tested that level, and pushed straight back up. So I'm still bullish on oil for now. I want to see it take this level. Let's have a look at the hourly. So looking at this leg as a leg that swept liquidity, we can run our standard deviations from that leg. And then use that for potential target regions. And we can see that we're on our way to the -4 at the moment. We've got to close above the -2.5. And if we just drop out to the daily again, you can see that this high is close to aligned with that -4. Hey JJ, thanks for tuning in, buddy. Do you need an hourly change instead of delivery to confirm an idea? You mean bias? No. So bias is, so time frame alignment, daily chart for the bias. Narrative and logic, we use the hourly time frame, and then entry function is on the 5-minute. So if your bias being from the daily and your hourly narrative and logic, if they don't align, if neither of them align, then you want to sit on your hands. So you want to see that the bias and the narrative and logic both have the same idea. So they're both bullish in your view as you're looking at the chart. Do I need a change in the state of delivery to confirm that idea? I don't, because the change in the state of delivery is a reversal pattern, and most of the time that's our unicorn that we're looking for on the lower time frame as well. So if you have a bullish bias and price is located at a point of interest on the hourly, then you might consider starting to hunt for a position after that. And it really comes down to personal preference. If you want to wait for a change in the state of delivery to confirm and have your narrative and logic and bias perfectly aligned, and then that's okay. That's up to you. That's up to the individual. But what you'll be seeking then and looking for is continuation unicorns. You wouldn't be actually looking for a reversal unicorn. And that's fine. There's plenty of continuation unicorns. We can see oil has just continued to, gradually chip away here and keep pushing up higher. Not without the occasional pullback, but again, you can see here that when price reached the -2, price had a pullback. So when we reach this area of interest here, the -2 to -2.5, we can anticipate consolidation or retracement. In this instance, we had retracement before price finding its legs. We move through, we get a close beyond the -2.5, and then you can see how price has found support there as well. When we closed through, price tried to come back, found support. Here's another example, guys, of the our insight to order flow. And price, continues to steadily climb higher. So this is our drawings that we had on the chart since Monday, and we kept the same idea through Monday and Tuesday. Price located inside a bearish FEG after sweeping a swing high as well. We had low resistance liquidity. Price moved through, and it did sweep the majority of that. And then we found price was able to take this low. So now that's our bias complete. We've moved from internal to external. So now I would be looking to switch my bias. We're at a bullish point of interest. Price was unable to close through that level. It respected that level and closed back inside the range. Therefore, I'd be looking for price to run higher. Mohammed, so the time frame I stick to for standard deviations is the hourly time frame. That's the only, I wouldn't say it's the only chart I use standard deviations on. I do use standard deviations for profit targets on the lower time frame. So if we're trading unicorn, then I would run the standard deviations off the manipulation leg, the leg that took liquidity, and then this will help me look for areas I might take partial profits or have a draw on liquidity. So I'll use the standard deviations to aid in my actual trades, but for looking at my narrative and logic, I use the standard deviations on the hourly chart. That's where I get a lot of my conviction from for where price might be heading. And I do find, and I'm not dissing StatMap at all. I don't use StatMap, but from what I've seen, a lot of the same information that I've seen shared using StatMap, I've found the same results using the standard deviations. Okay, so JJ's asked, how do you know if order flow is still bearish or bullish on the hourly? So if we have a look at, let's just use oil, this example. So for me, this is where the reversal happened. And honestly, sometimes I literally just draw a trend line and we can see that price is still moving higher. Then what you want to look for is price respecting, you know, in this case, we want to see bullish PD arrays respected. So, you know, bullish points of interest, say FEGs. So here we have a breakaway gap. Price left this gap untouched. You know, we swept these equal lows here. Price reacted to that, small bit of consolidation, then moved higher. Again, moved higher out of a bullish FEG. Gee, I've got to stop doing that. Again here, bullish FEG. We get another breakaway gap, so this is displacement. So we're seeing displacement here, so there's strength in this move. So that's how I tend to use the hourly chart. Even this, what looks like quite a strong pullback here, we immediately invert. So I'd look at that as bullish as well. The inversion then gets respected. Price tries to move lower, finds support here, and continues on its merry way higher. Diali, good morning. Happy New Year. I use the hourly time frame, JJ, more than I use anything else. I pretty much trade just by looking at the hourly, and then when my area of interest is swept, I'll drop to the 5-minute looking for my entry function, and then I'll execute. Let's check out gold. So with gold, I was looking for price to continue its move lower. We didn't get that on Tuesday. Price moved higher. I was looking at price to move from this external, moving lower. Now, these opposing candles here is, we've got to close back above this level here. Ideally, we wanted to see that level respected. So a wick here would have been fine, but we are seeing a close through. What I would then look for is we drag out the 50% of the range of those opposing candles, and price, we can see price has reacted to that level. I would remain patient here. because price didn't reverse out of a point of interest. So we're not at a bullish FVG or a swing low here. So for me, I would be waiting and remaining patient, still looking for price to want to head down to this low here. Hey Jerome, thanks buddy. Catch you later, mate. Yeah, good luck to you as well, pal. We'll see you on the 6th. Take care, my friend. So yeah, I'd still be looking for price to run lower here, looking at the daily time frame, as we are respecting this level, but I would remain patient to see how price reacts when the market opens again. If we immediately take the high from Tuesday, then I'd be wanting to see or hoping to see an open high low close scenario. If we have a look at the hourly, do we have a change in the state of delivery? We do. This is the cleaner level for me. It stands out. This level stood out straight away. When you have failure swings, you could use even this level here as a change in the state of delivery, because we do have displacement. Price respected that level as well. What I like is that, we've got a bullish breaker here with displacement. We've got to close beyond that. Price has swept these highs. That's what we see in reaction here. We've got those equal highs, but we are consolidating. We do have smooth edges, low resistance liquidity resting through here. If we run our standard deviations out, that would be a potential target if price does continue to move higher. We do have lots of low resistance liquidity on the way through. Plenty all the way up here. Back up to this high. So that's what I'll be looking for price to respect on gold. If we are going to see higher prices, then we want to see this breaker, this level respected. If we start moving through this, particularly if we get a close through this level, then we're likely going to see lower prices. So you can see here how we want to be patient. The daily for me is still potentially looking for bearish price action, but we have started to print a reversal pattern here on the hourly. Do I use daily profiles as a confluence? Look, not really, to be honest. I started trading in crypto, and we always looked at midweek reversals was probably the main thing we looked at. If we have a look at NQ, obviously we had the public holiday between over Christmas, the Christmas public holiday, but then Thursday put in a reversal. I do look for, after expansion, we've got multiple days of expansion, potentially a TGIF, where we might see that reversal on the Friday. But I don't really look at weekly profiles all that often, to be fair. I do have it stuck to my wall, so I do have the weekly profile stuck to my wall, but I don't really use them all that often. Well guys, I might wrap it up there. If there's any more questions, let's quickly drop them in the chat. Otherwise, I'm going to head off and get some rest. I hope all of you found some value here today. I appreciate you tuning in. It's a quieter session today, but I really do appreciate everyone who commented in the chat. Remember to sub to the channel and like the video and push the channel far and wide. I'm still aiming to get to 1,000 subs. I'm very close. So if you guys can help me get there by the end of January, that would be spectacular. Do you use that for, what I mean is sessions like, oh yeah, I definitely use sessions. Sorry, yeah. So if you have a look down, if we drop down to the 15-minute chart, I use the ICT kill zone and pivots indicator. So I always have the Asia and London sessions marked out, and I definitely use the sessions 100%. So we can use the session highs and lows as points of interest, looking for reversals, particularly if it's, you know, a seek and destroy sort of day. You know, if we're in a range, for example, and you know price has been bouncing around in the range, we can look to take reversals off the extremes of the range back to equilibrium, and then you can do the same thing from the low and the high. So you might see some more consolidation. Okay, so I definitely use the sessions. 10 new subs on the way. Let's go, Mohammed. Thanks, buddy. All right, guys. It's actually been quite a good morning, quite a good session. I really appreciate all of you tuning in. I'll be back again tomorrow with my daily videos. And let's look forward to what's going to be an amazing 2025. All right, guys, take care. Just remember to sub to the channel. Greatly appreciate all of you tuning in. Thank you so much. We will be back with our daily video tomorrow. Take care, guys. Bye for now.